Hello, friends, and happy Wednesday. Wow, can you believe such busy times these days? Welcome to the Live Level Up show. It's such a great conversation to have you here with us. Of course, if you're tuning in live, thank you so much for being here. If you're catching me on replay, it's wonderful to be here with you as well. Happy Wednesday. Let's dive right in.
Welcome to Level Up with Winnie Sun. Market update. Speed round. Award-winning financial pro. And now, get ready. I present to you Level Up with Winnie Sun.
Hello, friends. I'm Winnie Sun, your host and award-winning financial pro, a Forbes and CNBC contributor and council member, and I'm wonderfully happy to be joining you on this Wednesday. Wednesdays are always a really busy day. It's also when we do our tweet chat, which is going to happen right after we finish this show live. For those of you who are brand new to the show, welcome. Definitely jump in, say hello. We are certainly live, and we love to see your interaction, of course. Now, let's start where we always do and tell you how the market is doing currently. Unfortunately, a continuation of being in the red from yesterday. The Dow is currently down about 55 points. The Nasdaq's down about 110 points, and the S&P 500 is down about 11, 12 points as well. Unfortunately, we are waiting for some tech company, very large tech and AI companies to report earnings, and so investors are sort of on edge on that. But talking about tech firms, I wanted to share with you a little bit of news. This is kind of a big one. In fact, Amazon is about to join the Dow Jones Industrial Average. Now, they are replacing Walgreens. This is big news because this is a significant reshuffle for the Dow. Like replacing Walgreens, Boot Alliance underscores sort of the way the U.S. economy is evolving, and this plan is, of course, enhance the consumer retail exposure within the Dow Jones. So this shows just how big Amazon is and its influence across multiple sectors. Now, this is planning to take effect on February 26th, just around the corner. And this change is partly driven by Walmart's recent stock split, which altered its index weight in the Dow Jones. So, under Andy Jassy's leadership at Amazon, Amazon has experienced a considerable growth, remarkable growth, in fact, particularly in its cloud business segment and advertising, and are even outpacing many tech competitors like Alphabet, which is Google, Meta, and even Microsoft in revenue growth. So this adjustment is following the addition of other companies into Dow Jones, including Honeywell, Salesforce, Amazon, Amgen as well, which just goes to show you the Dow Jones's ability to adapt and change with the business change here in the United States and how spending is occurring and earnings and everything else. So it's really interesting. This new Amazon inclusion, we're going to be looking forward to seeing that on February 26th and just see how that will impact the Dow Jones Industrial Average. Of course, we'll have now a little bit more exposure to technology as well, because Amazon obviously a very big, giant, expanding influence in technology, which encompasses retail, cloud computing, and of course advertising sectors as well. So I guess congratulations, Amazon. Hope you like your new home in the Dow Jones Industrial Average. All right. Speaking of big news, this one's a big one. If you haven't heard already, this one's actually significant. Capital One is acquiring Discover Financial Services in this major credit card industry shakeup. Yes, in fact, this is a big $35.3 billion all stock deal is set to create the largest US credit card company by loan value. I don't know if you remember, but it wasn't that long ago. I remember when I got my first Discover card. I don't even know if there were Capital One credit cards at that time, but I remember getting my Discover card. And at that time, Discover was really just sort of a huge credit card company even back then. And now Capital One acquiring this is a huge deal. Now, this deal is expected to close between late 2024 this year and early 2025. Of course, there's going to need approvals are going to have to take place with regulators and then shareholders with potential implications for both Discover and Capital One customers. And what that's going to look like, we don't really know yet. But of course, when we do find out, certainly trying to share that with you as well. But short-term impact, immediate changes for customers are probably unlikely until the deal is actually finalized. But the Biden administration has said their anti-merger stance may influence the deal's timeline and conditions, but this will really expand Discover's reach too. The acquisition is hoping to boost Discover card acceptances, particularly on the Capital One network, which is looking to challenge Visa and MasterCard's dominance. So the merger could result in higher interest rates for some consumers. We don't know yet. Still just rumors, particularly those with subprime credit scores which are targeted by Capital One. So I guess congratulations. Hopefully your deal goes through. There is, of course, some political um, discussion on this, including Senator Elizabeth Warren, is raising concerns about the merger's potential impact for consumers. And they're really advocating for regulatory intervention to make sure that it's in the best interest for you and I. So we'll see how that unfolds, but certainly huge news. Huge news. And speaking of huge news, been so much business news and financial news. I want to share with you. I feel like even the financial and business news is getting a little bit more creative and creative in terms of the words that they're using. And I want to share with you two that came on my radar this week that I thought you should be aware of. And huge, before I jump to that, though, I say huge welcome to Brian Schumann on LinkedIn. If you don't follow Brian, make sure you do. Such a great human being. And great to see you, Brian. Thanks so much for joining in. And of course, Vicky, thank you so much. We really support you and appreciate you. And of course, your support back to us on Facebook as well. Thank you so much for being here live. I see a lot of friends on the different platforms. Don't be shy. Come in and say hello. Even if you're on replay, say hello. And that way we can appreciate you as well. So these are two financial terms that I found being used this week that I thought you might find interesting. And the first word is choiceful. That's right. This was on Yahoo Finance. They're talking about Walmart CFO, John David Rainey, talking about Walmart's recent earnings and customer spending behaviors. And they're saying that, customers are being more choiceful. So what does choiceful mean to them? Well, choiceful means for them saying that Walmart has seen that customers are being a lot more selective, especially with larger purchases. And yet they're actually shopping more frequently, but they're just being more choiceful, being more careful about the things that they're going to be buying, which is reflecting sort of that loyalty and adaptation to this current environment that we're in with the economy, obviously mixed economic data and in different categories, seeing different rates of inflation or deflation, things like food and consumables and even TVs and everything else, right? There's still a lot of issues there. But their CFO said that Walmart is really trying to make an effort to lower prices and to challenge different companies and providers of merchandise to give better pricing to their customers as well. So that's the word, choiceful. So I guess as you're going into your day to day, if you're going to the restaurant or going shopping, I'm going to be very choiceful this week. That's one word. The second word that has come about this week and shared, and actually heard this one before, but I don't know if you have. I think it's a good one to kind of put on your radar too. It's called the hockey stick recovery. Have you heard of the hockey stick recovery? If you haven't, don't worry. Let me share with you what it is. It was recently brought up again on Yahoo Finance, and this is in discussion to Home Depot CEO Edward Decker, providing sort of a neutral outlook for the housing market of this year, 2024, and really talking about how the company doesn't really foresee a significant pressure or rapid recovery in the sector. So in the fourth quarter, Home Depot sales dropped 3% to $34.8 billion compared to the previous year, which obviously is higher, but nonetheless is sort of a cautious stance saying, given current housing availability and affordability, and of course the rising and the mortgage rates actually rose again today. So I'm going to say rising mortgage rates. They haven't really decreased enough for people to really jump back and be able to purchase homes quickly. And be able, of course, when they purchase homes, a lot of people will then remodel their homes and make updates and spend money on things like paints and appliances and things like that, which can help companies like the Home Depots of the world, right? And of course, the Federal Reserve's likelihood of rate cuts, it doesn't look as good as it did just a few months ago. So because of it, they're not expecting what they call a hockey stick recovery, which is a term used to describe sort of that really quick um, improvement, if you will, in the growth or performance following a bit of time where there's sort of decline or just decrease in spending, stagnation, all that stuff. So, this whole term, of course, is from the shape of a hockey stick, where there's suddenly a big improvement after a relatively downward trend or flat trend. So, there you go. Hockey stick recovery. Now you know two words, right? Choiceful spending. Let me know if you use these two terms this week. And if you do, send me a message. Let me know how you did it and like the response. Did you feel like you knew something more? Like more, did you feel more business smart? Or did you just think like the financial industry and news is just getting a little too creative and they got to get back to just explaining things like regular human beings? Either way, I'd love to hear from you. And then, of course, with that in mind, I want to share one thing before we close off here is because today's Wednesday, and Wednesdays are special because that's also when we have our hashtag Winnie Sun tweet chat, which we're going to have in just about 10 minutes here. So after this show, definitely jump on Twitter/X, if you call X now, great, and search for hashtag Winnie Sun. We're having a brilliant discussion about building brands and these different strategies that you can take for bigger, better branding in 2024. Now, this chat is going to be led by the powerhouse Ross Quintana, my good friend and my fellow Adobe insider colleague there. He is a futurist, and BuzzSumo has ranked him a top 100 social media influencer, and he's founder of Social Magnets as well. He's just an incredibly smart and incredibly great human being. So I'm excited to welcome him to the Winnie Sun Tweet Chat today. He's also a strategic partner, social media at Adobe, and marketing futurist, brand strategist, customer experience advocate. His bio is pretty long, so I'm not going to go into all of it, but I'm going to say and tease that you got to come in and have a discussion with him. He's going to be on our tweet chat in about 10 minutes. So join us at hashtag Winnie Sun, and you can ask him questions or you can respond to his answers and get to know him. Just a good person to have on your radar for sure. Now let's close up and let you know how the market's doing. The Dow is currently down 44 points. Nasdaq's now down 108, so a little bit of improvement, and the S&P 500 is now down around 10 points as well. So thank you so much, my friends, for being a part of today's Level Up Live. And really grateful for you being here. Don't forget to hit that like button and subscribe to stay updated with all the latest content and to find full episodes of Level Up with Winnie Sun. Make sure to check out us on NASDAQ.com, Amazon Fire, Samsung, LG, Roku, and other streaming platforms. And when sharing their episodes online, thank you so much for tagging at Winnie Sun so I can probably thank you on a future episode. And of course, with deeper dive into more content, you can also check out my podcast at Yes Factor with Winnie Sun, which can be found at Apple Podcasts or wherever you tune in, and the LinkedIn Podcast Network. We have a lot of fun new content in the pipeline. I can't wait to share with you. But with that, hope to see you on X or Twitter very, very soon, about 10 minutes. Have a wonderful day. I'll talk to you soon. Take care. I'll see you again this week. Okay? Bye-bye now.